Hello. Good morning, everyone. Right. Okay. Good morning. If you can make sure, just confirm that you can hear me. Okay. First of all,
Morning, Luca. Yeah, we can hear you.
Perfect. Fantastic. Let me just give me a second to sort out live. Okay. And we're live on YouTube as well. Okay, just 1 second and now we're done. Okay, and we're up and running. Good morning, everyone. There's Duncan as well in a second, so I can have Duncan. I'm making a co-host. Okay, so I can stop looking at the video. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Nice to see you. Hi, Nives. Nice to see you on the call. Well done for making it here, and well done to all of you that are here for the first time. So what we generally do in the Crypto Hour, we look at a few items of news, a few things that is worth talking about, and that goes on for about let's say the first half of the hour, and then we open the room up to question and answer sessions. So if you have any questions that you would like to ask, start getting them ready now. They don't have to be referring to what I'm going to talk about now. That can be anything that you want to ask about crypto. And obviously, if you during my presentation there's something that's not clear or that you want to ask, then obviously write it down so you can ask it when we open the Q&A session. Okay, and the one thing that I wanted to talk about before we talk about anything else is we already discussed in the past couple of weeks how crypto and macroeconomics are going hand in hand at the moment, and there is a high correlation between the prices of cryptocurrencies and prices of other assets like stocks and shares, for example. Especially if you're looking at the American market. So if you look at the Nasdaq and the S&P 500, there is a strong correlation in the sense that if one moves in one direction, then the other one does as well. But crypto being a more leverage reaction, let's say there is stocks and share counterparts. So whenever the stocks and shares go up, then crypto goes up more, and whenever they come down, it's the opposite. The opposite is true as well. Okay. Now, the one thing that we cannot avoid is to look at what is going on in the world in terms of economic news, but also in terms of political news, because what happened last year in 2021, crypto was widely accepted as a new asset class, as a new investable asset. So at the same time as we've seen extra capitals coming into it, and whoever has been into crypto last year has benefited with the increasing prices. But at the same time, now there are players in the crypto investment sphere that are there in other sectors as well. So they kind of like investment play, kind of investment funds, pension funds, hedge funds that are looking to use crypto as they use any other asset class. So it will move more like other asset classes than just having a life of its own. Okay. At the moment, what is dominating everything is a couple of issues. Okay. One is the impending or not impending, depending on how you see, war between Russia and Ukraine and all the NATO countries, and what kind of actions they will take if Russia takes any action. So whenever there is uncertainty, something that can affect a vast part of the world, like this particular issue is, and the market reflects that in its prices. Okay, so we've seen today, last night we've seen a big drop, for example, in crypto prices. At the same time, there's been a big drop in the price of stocks as well. So not just crypto has gone down, but also if you look at something like technology investments, like the ones they are listed in the Nasdaq, for example, we've seen a similar movement. Okay, because it's basically fear that is dominating the market. Now, when we talk about Bitcoin in particular, rather than other cryptos, there's been, and we talked about in the past few weeks how the big holders don't like selling Bitcoin. Okay, so even throughout the price drops that we had in in May and we had in November, big holders are kept accumulating Bitcoin. So how do they deal with something like this? Okay, and they deal with it through derivatives. Okay, so derivatives like futures, options, and other instruments of this sort. So how do you do? Especially when you have a big portfolio, it's not often practical to let's say sell everything, even if you think that the worst is coming. But obviously, for big institutions, their main remit is to keep the funds under their management safe. So how they control these is generally by using derivatives and as a hedge against risk. Okay, so for example, if you thought that Bitcoin was now from 40,000 was to go down to 10,000, you could do two things. You could sell it now, and then eventually buy when it's gone down to the price that you think it will reach, or you could buy an option. Okay, an option is basically a right to either buy or sell a particular security. In this case, we'll be talking about Bitcoin at a particular price. Now, a right to buy is called a call option. Okay, so for example, I could use, if I think that the price of Bitcoin was going up to 100,000, instead of buying Bitcoin, I could buy an option to buy Bitcoin, let's say at 50,000. Okay, in 6 months from now, and then if the price goes up to 100,000, I will get the difference between 50,000 and 100,000. But it wouldn't cost me as much to get into that position as it would be to buy the original Bitcoin. I would just pay a premium that gives me the right to buy to buy those Bitcoin in 6 months at that particular price. Okay, and so this is why it's they're being used both as a hedge and as a many traders, they use derivatives to trade because they might not have the funds to buy, whether it's Bitcoin or whether it's, I don't know, Apple shares or Google shares. They might not have the funds to buy those things directly, but they have the funds to pay a premium, that gives them the right to the price increase or decrease of the underlying security. Okay, so in the case of the price going down, you can buy what they call a right to sell option, like a put option. This is what they're called. It gives you a right to sell, in this case, let's say Bitcoin at a certain price at a certain date, okay, or before a certain date. Okay, so let's say now, if I thought the Bitcoin was going down to then 10,000, at the moment is about 40, I could buy an option, a put option, to sell at 40,000 in 3 months' time. Okay, so if it went down to 10,000, I could keep my Bitcoin without having to sell them, but at the same time, I will get the difference in price between the 40,000 and the 10,000, because the price is 10,000, but I've got a right to sell you because you sold me that contract to sell you the Bitcoins at 40,000. You see the power of it. So in a way, I could keep my Bitcoins and still have the same amount of cash I had before, even if Bitcoin went down to 10,000. Okay, so, and again, why do I talk about this? Let me share let me share this. Those preamble is to basically show you a graph, you know, of what we're looking at right now. And this this graph in particular shows you the put and call ratio. Okay, so if when the graph is higher like this, it means that there are more there is kind of like there's a different ratio between put and call options. Okay, so we went down from a decrease of put options, because when Bitcoin was going up and we saw the prices were going up, and people were not interested to have a right to sell. But now we're seeing that in January and February there's been an increased purchase of put options compared to call options, because people are basically protecting their positions. So this tells us that there is kind of like some fear in the market, because nobody knows exactly, if the market is going down or not, and you don't know to which extent. So if you have a lot of Bitcoin, you want to basically buy insurance. Okay, and this is what this is showing, that in January until now, there has been an increasing number of people that have bought this sort of insurance, or it could be speculation by people that don't have any Bitcoins at all, but they just think that the price might go down and they want to profit from it. Okay, so that's that's from that point of view, the point of view of how the market is seeing what is coming down the line. And what we've seen as well in the futures market is that until the end of March, the market sentiment is that the price will hover around 42,000. And the price prediction at the moment, this is in the futures market, okay? The price prediction for the end of the year is 44,000. So it doesn't mean that this is what the price will do, but this is what is priced in on the futures market at the moment, okay? So it can give us an idea of what the sentiment is, okay? It's not, don't use it as a price prediction as such, but it's if you wanted to, if you believed, let's say in Bitcoin hitting 100,000 this year, then you could buy some very cheap futures, basically to have the kind of the price differential gain with little of the investment necessary to have a large position in Bitcoin. Okay, so going into different kind of news that we can talk about. This is interesting. This is a couple of weeks old, but it's interesting to notice now that KPMG, which is one of the 4 big worldwide accounting firms, is now adding Bitcoin to the Treasury. So this is just kind of like talking to you how is being more and more accepted, on a worldwide basis, that this new technology and this new way of storing value is here to stay. And so KPMG, obviously being accountant, they have to deal with the fact that there are many people and many companies as well, publicly listed companies, many of their customers that need to account for having cryptocurrencies on the balance sheets. Okay, and so not only that, but they're thinking actually it is a good idea to actually have some Bitcoin ourselves in our treasury, because it's a good hedge against inflation. Okay, moving on. This is kind of like a more of of a way to make you realize how things, how habits are changing. And the reason why, the kind of the millennial generation is approaching cryptocurrencies in general is part of it is due as well that they have a low financial well-being. So they're trying to find ways of bridging the gap from where they are now, where they would like to be, and it's kind of like they see they're more comfortable with investing in cryptocurrency. At least it gives them an option to, to get their finances in a better state quickly, rather than the traditional system but they don't feel really engaged in, maybe putting the money in bonds or in a bank savings scheme, or rather in kind of a long-term pension scheme either. Okay, so this is more of a generational attitude towards this new asset class as well, which is important to understand, because really it's just not buying. You don't come on this call just to say, I should buy this or I should buy that, but understanding why, or what's generating the reason why this technology is spreading, and what's generating the demand. Okay, so we need to look at many different things to understand that. Okay. Obviously, this is what we are worried about at the moment. Okay, so there is a market-wide downturn, and this affects all, let's say, not just crypto, but also shares, because there are these worried about Russia. Okay, and funny enough, if we look at the charts, Bitcoin, we can see there are kind of like moments when. Let me go on to, sorry, this is a long-term chart. Let me go into a 1 hour chart. So can you see here, as prices went up sharply, when there was some news, sorry, not more recently, not as far as that, went up quite sharply here when there was some news that Russia was moving some troops away from the border. Like you looked at the potential of war was like fading away, and this is kind of a more recent news instead, when everybody's talking about impending war and impending Russian invasion of Ukraine. Okay, so what normally happens during a war, there is a rush towards safe assets, and generally, traditionally speaking, the worldwide safe asset has been seen as the US dollar. Okay, so movement from all other asset classes and moving to US dollars normally when there is something major like this either happening, or there is a fear that it might happen. Okay, but at the end of the day, nothing. The important thing to understand is that nothing is changing. So these are not movements, they are crypto related. Okay, these are wider macroeconomic factors that are influencing prices of assets in general. And obviously they include crypto in this as well. So if, and again, we start talking about then how widely things move. So we're talking about just short of 10%, 9%, in the past couple of days, compared to about half of this in the stock market. Okay, which has come down as well, but less than that because it's less volatile, than crypto is. But from a before we go into like lighter issues, there is something I wanted to show you as well in terms of the decentralized finance sector and how things are moving or not moving. The projects they are making waves. Okay, this is, first of all, I wanted to look at this graph up here. Okay, and this is basically the whole decentralized finance sector, and we can see how it developed. So where we were at we go to January 2021, you can see Ethereum had pretty much 97% of the whole market. Okay, and now if I get my cursor away from that so you can see better, as we are moving towards where we are now, as there is a larger and larger percentage of decentralized finance that is on other chains now. When we get to the point at the moment, I think it's about 58% on Ethereum, but that means that more than 40% now is on other chains like Terra, Binance Smart Chain, Avalanche, Phantom, Solana, Polygon, Tron, and so on. If we go and look at who's making waves in this sector, so we have a look, so we can order things by 1 day change, like here, so whatever is increasing more than 1 day on the last 7 days, yeah. Or if I look at the 1 month, that's a bit more stable. And I mean, don't get too impressed by this number, but obviously it's showing that our Cardano is now increasing by a huge amount the number of the funds that are being deposited into the decentralized finance. Other projects as well, like Theta and Telos, IOTX, Ergo, and so on. Okay, now this is something I wanted to show you. Now you see that 3,500% in Cardano, okay? But you cannot take percentages in isolation. You have to be very careful with statistics. So this is, you see these sort of percentages because DeFi sector is very, very young in Cardano. But if we have a look at the overall figures, at the overview, oh, sorry, the chains, not the projects. Let me just do this. Come on. Okay, if we have a look at the overall figures, then this paints a different thing, because obviously Cardano is nowhere to be seen at the top because the amounts of total value lock is very little compared to Ethereum, Terra, and all the other projects that have been going for a long term. Okay, so if I do that again, you can see now that although it's at 3,500%, the total value locked is in kind of 129 million, where other projects are in the, we're talking about hundreds, for some of them hundreds of billion, rather than, so in Ethereum, for example, 123 billion, on Binance is 12 billion and so on. So you need to look at, this can start giving you some, a look about the projects that are making waves, let's say, what people are looking at. But at the same time, you need to then look at reality as well to see how big a particular ecosystem is for decentralized finance. Now, going on different things that are interesting to look at. There's a couple of more lighter news. This is kind of like a new thing now. We're seeing there's an Indian dating app now. They're starting to do metaverse dates. Okay, so they've apparently arranged a virtual date for two in a kind of a moon-based setting. So you have a date on the moon, of some sort. Kind of like we got to get used to more and more of these things as more people spend time online. So all kind of activities now will find their place on platforms like metaverses, and there will be then different players that offer different products. Okay, so this is interesting to see, and I don't know, it's a long time since I was into dating, so I don't really look into. I don't know what the other options out there are, but it's interesting to see. I thought it actually tickled my fancy to share this with you. But another thing that may be more important to show how brands are moving on to this space is to see how Gucci has actually opened quite a significant shop in the metaverse in Sandbox. Okay, and it sells all kind of at the moment it hasn't quite been revealed yet, but it's been an online concept store. So there would be access to a virtual world within Sandbox whenever you walk into the Gucci store itself. You walk into a another world is being created by them with the virtual experience, and we still don't know what is going to be available exactly. But they purchased a big amount of land on Sandbox, and they will develop an interactive fashion experience, okay, based on this Gucci Vault. So they haven't quite released any additional information, but there are so many big brands like Adidas, like Warner Music, and the Bored Ape Club, again, which has become it's a crypto brand that has become massive in itself. And even let's say Adidas and Prada announced a collaboration, and it's really interesting what's happening right now. And although we might not know what's happening in terms of general price this year in 2022 with crypto, because so much it will be determined by other things, by other factors. But one thing that cannot be stopped in a way is the change in society that this is representing. Okay, because this the metaverse. I mean, you might hear this term, the metaverse, and think I wonder what that is, or how relevant it is. The thing is that this is a trend that's been going on for the past 20 years. People are spending more and more time online. Okay, cryptos has added a new, well, say a new phase to something that was already existing, because the metaverse is not a crypto new something that was born within crypto, but it's already existed for many years. And Fortnite, for example, is huge in terms of its metaverse. I was just driving through London a couple of days ago, and in one of the parks there's a what's it called, a gallery, and they were having this particular exhibition, and it was saying, watch it in Fortnite. So you could actually access the exhibition through the Fortnite metaverse as well. So if you couldn't be there in person, you can log into your Fortnite account and go through this online version of the art exhibition. Okay, the having been in in crypto added a couple of different levels. Okay, in the sense that, first of all, these projects belong to the users. Okay, so it's not just, let's say, Fortnite actually making money from all this, but that anybody that takes part in these new platforms, whether it's Decentraland or Sandbox or any other metaverses, can actually benefit from it, and also take part in shaping the metaverse itself, because it is created by the users. And also it adds a native way of handling transactions. Okay, so that you can use the crypto cryptos within these metaverses in a seamless manner. So I think, what time is it now? So we've done about half an hour. So I think it's maybe a good point to finish on this. And there's been a lot of talk about metaverse, and I know that Roger has been talking about his own version and what he's trying to do with Genius U within metaverse as well. So this is something that I was saying is not going away, because it's simply representing that people are spending more time online, and it's give them basically a structure that they already know now to then go and find out about things in a way that's more interesting than simply typing a website address in your browser, but it gives you a more immersive experience. So as people are spending more time online, there's going to be more and more of these metaverses as well coming up, where you can join a particular community, or you can go and connect with your favorite brands. Okay, so that's the one thing. The other trend that in a way it's it also has an effect on this, and within and without the metaverse is also gaming, because whatever happens to the prices in crypto, there's lots of games now that are being released in crypto, because again it gives them another dimension. So it's not just playing a game, but you can play, you can own your characters, which you can then transact and sell on to somebody if you don't want to play anymore. You can also earn through playing. So there are many play to earn games now, and most of the new games now have one aspect or another of crypto within their games. And whether it was 1 year ago, it was still kind of like less than 10% of games had something related to crypto. Now it's pretty much all the new games I've got some other NFTs or crypto capabilities built into the game. So this is going to carry on as well, whatever happens to the prices in crypto, okay? And whatever happens to the development of blockchains and other, this will carry on, because also what's coming down the line in terms of user friendliness and speed of the blockchain is going to make is going to offer the resources the games need to be able to be played in a seamless way, again, without having to wait and hang on to waiting for transactions to go through. But we new releases in different technology in different blockchains. This will happen a lot faster, a lot quicker, and it will make gaming a lot easier on the blockchain as well. So, add a trend to keep to remember. Okay, so let me stop sharing now, and let's start taking some questions. So, I know that Duncan needed to go, so I'm not quite sure if he's still here or not, but I can see Karen. Let me just change the view as well, so at least I can see you all and see if you're raising your hand or not. So I know that Karen wanted to ask a question. Go ahead, Karen.
Yeah, two questions. One of them's quick. That website you were just on when you were looking at all of the different positions, like with Cardano being the top, what was the website?
That's DeFi Llama.
DeFi Llama. Oh, awesome. Okay, thank you. And the second question, I'm sorry, I was a couple of minutes late this morning, so I'm not sure if you've covered it, but what's going on in Canada at the moment? I was just wanting to get your opinion on that, and should we be concerned or not in terms of what they're doing with regulating crypto? The truckers got crowdfunded, and now what Trudeau has decided is that they're anti-terrorists. All these peaceful protesters now, he's labelled as terrorists because they're saying stuff he doesn't want them to say. So what he's done is he's broadened the anti-terrorism laws to include digital assets like crypto. Yeah. So that's a bit scary, you know. Can Canada regulate crypto? Can anyone regulate it?
To be honest with you, this is kind of like a little bit wider issue than just that, because it's something that we've had first experience of in the UK. I mean, we had 2 consecutive prime ministers that have tried to basically rewrite our constitution without any approval. Okay, and this was during the Brexit process. Both Theresa May and Boris Johnson have tried to bypass Parliament. And the thing is that since the Twin Tower attack, we've had an increasing number of kind of like temporary measures. They have been initiated because of with terrorist reason, because we are dealing with these terrorists, and then have become permanent.
But then they can make anybody a terrorist,
exactly.
Can't they?
Each one of these measures have actually reduced yours and mine liberties.
Yes.
Things that often it's taken many, many decades to get to that point, to enshrine those freedoms in law. Now they've been pretty much taken away. This is another example of that. And this is why, we were talking before saying, for me, the watershed moment in cryptocurrencies, I'm not talking generally tokens, but talking about a currency that uses payments, would be when you would be able to use your cryptos directly at the point of sale. Okay, because at the moment now, even when you can use it, you can't use it directly yet. You always exchange it, apart from a few examples, but generally you exchange at the point of sale for the local currency, and then you spend the local currency. Okay, so it's done automatically for you, so it's kind of like seamless. But this is what's happening. So the moment that you can go and buy your coffee directly, paying the retailer with cryptocurrency, then there's nobody that can get in between that transaction. And they can't block anything. Well, how can they block you? They can't control Bitcoin. They can't control Cardano. You see what they can control though? They can control Binance. They can control Coinbase, because these companies need a license, and they say, if you don't comply, if you don't stop these accounts or that accounts, we will revoke your license. So they got their hands tied, but they couldn't stop a non-custodial wallet.
A what? Sorry.
So they couldn't, if you had a Bitcoin account where you store your coins, this is not connected with an exchange. They can't stop you.
So keep it in a wallet then, rather than on an exchange.
No. The idea is that we're not there to the point where you're actually spending. So you can go to your Starbucks and say, how much is this coffee in Bitcoin? Not yet. Okay, but the moment that you're able to do it, and where you pay with Bitcoin or with Cardano or with Polkadot, whatever you got in your wallet, and they receive exactly that instead of receiving, pounds or dollars or whatever else, then at that moment, it's impossible for anybody to sit in the middle and say, you can use this wallet or you can use this wallet, because it's then a transaction peer-to-peer. It cannot be intercepted. So in Canada, they couldn't do this thing, with if there weren't any exchanges included in the transaction as intermediaries. So that's the main thing.
Good point. That's good. I'm gonna just check everything onto wallets then, just in case. Yeah, right. That's and the best wallets to use. I'm using Exodus for all of my non-Ethereum stuff, and my MetaMask for all of the Ethereum stuff. Are those the best ones? I
wouldn't comment on that in the sense that there are so many different ones, but the thing to understand is what these things are. These are software wallets anyway. Okay.
I've got a ledger as well. I can back them up on. I just need to figure out how to do it.
Yeah, if you figure out, there's plenty of videos online to tell you how to use your ledger, but it's a safer option than storing it on a piece of software on your computer, basically.
Okay, awesome. Thank you.
Okay, all right. Let's keep questions coming. Anybody else has any questions? Otherwise, I'll start reading. I don't know, Pierre. I haven't read yet about the social grant system in Canada. Okay, so that is something that we'll have to cover another time. And John as well is asking about the presentation that Roger did for the Genius U investors. I will not go into that. Please don't get me into that, please. Okay, I can talk to you individually if you want, John. Okay, but don't get me in trouble, please.
That's fair enough. No problem, Luca.
Okay. So Eric was saying, do governments have access to your cryptos? Depending on how you store them, again, that's the question. China has developed a central bank digital currency. So obviously, if you're using that currency, they know everything that you're spending. When you're spending, who you paid, how much you have in your wallet, and everything. They have all that information. If you use central exchanges, then most central exchanges now you're required to do KYC. So again, there is a link there to to your name and your address, and they know how much you have in your accounts. The thing is that when Bitcoin came, was thought of, is the idea that you can see everything on the blockchain, but at the same time that your identity is anonymous. So so you can see that wallet A paid wallet B, but there was no way of knowing who owned wallet A or wallet B. Now, the thing is that if you then transfer these coins onto an exchange where you've done your KYC, then obviously, that wallet there belongs to Luca, or belongs to John, or belongs to whoever, so they can tie very easily in that way. And that's the way they are getting to you. And the other thing that's going on, by the way, behind the scenes at the moment in the US, is they are trying to get to control stable coins. And in a way, so the underlying idea is that they might try to pass legislation where only authorized licensed actors, or basically the banks, will be allowed to issue stable coins, or at least kind of like authorized stable coins, which is a big worry, because then again you're giving all the power to centralized players that can do what they want with it. But at the same time, there is a big movement, and we know about within Cardano as well, of creating algorithmic stable coins. They are not linked to a particular currency, but they're based on certain algorithms to keep their stability. That many projects may decide to move towards, if there is an increased control of stable coins on the part of governments. Okay, it remains to be seen, what they are trying to do exactly. I mean, some regulation would be welcome, because obviously somebody is telling you that they are 100% collateralized in terms of any stable coin they create. Then there is a reason for somebody to say, well, show us your books. Where are these funds that are stored in a bank's vault? But at the same time, if the control goes beyond that to the point of wanting to control the whole process, then there are already solutions being developed now, to move away. Think, okay, if this is what you're doing to stablecoin, we simply won't use it, use something else. Okay, so we'll see. This is an interesting time. So I think in the next couple of years, as cryptos become more normal in everybody's life, there will be some regulation that will bring legitimacy as well to the whole sector. But on the other side, there's going to be a price to pay. How high this is, remains to be seen. And we're all in here, by the way, to influence as well the processes that are going on in our name. Because what happened last year, when there were, you might remember, there was this infrastructure bill going through in the US, where this provision for crypto was introduced. There was an absolute mess, simply because somebody said, look, there's lots of money in crypto, and we can tax it. Basically, can get lots of money, can get billions out that way. So that was the whole reason why that was introduced. Okay, but the thing, on the back of that, they got now a lot of the crypto projects and crypto communities that mobilized very, very heavily. And there were some Senate committees that were dealing with this stuff that we started receiving tens of thousands of calls every single day. So soon these people, the legislators in the US and in many other countries are pretty much neutral to crypto itself, and so they kind of like they see, they move one way or another, depending on how we can affect their electorate. So once they received that there was so much attention behind it, there has been a lot going on in the past 6 months because many senators and many representatives have actually started to inform themselves about crypto, to understand the sector better, simply because their electorate now was asking them to pay attention to it, and they could affect their re-election chances. Okay, so there's one thing we've got to remember, is that one thing is activity from the part of the regulator, and one thing is the legislator. Okay, the regulator works to apply the laws. Okay, they come out of parliaments and senate. The problem now, especially in the US, that those laws are not in place. So they're very vague, and the regulator is trying to basically grab as much power as they can, and is trying to try things and then go and test them in the courts. Okay, so this is why regulation is important, but it is important there is a proper process, that things get discussed, and then when it comes out, a certain law comes into place, that then with a clear rules that also the regulators must abide by, not just us, but the regulators as well. So it would limit the power of the regulator in a way, because it would give them precise directions in which to operate. Okay, so this is why it's also welcome. It's not just a worry. We have a Stan. Stan, you have your hand up.
Apologies, Luca. I got distracted when you were talking about the put option.
Mm-hmm.
If Russia invades Crimea on the weekend, and Bitcoin, everything's going to drop. Bitcoin's going to drop. Everything's going to drop. And if you wanted to take out a put option, how do you do it? I may have missed that earlier.
Yeah. I mean, you go into one of the platforms that, obviously on a traditional options, the Chicago Board of Exchange. So they manage the traditional options. So there are futures. There are futures on the Chicago Board of Exchange for Bitcoin. They've been in place for years. But they're also crypto platforms like DYDX or Bybit or something like that, where you can buy and sell options.
Not your traditional Coinbase, Binance.
No, not really.
Okay.
Yeah.
Okay. Thanks.
Oh, by the way, there's some, for those of you that are interested in Binance. I mean, there's some good news after all. Is that bank transfers have been re-established from both Europe and the UK. So if you want to put some money in your Binance account, you can do it directly from your bank and take money out as well. So we should see a stop to the persecution we've had, hopefully, from the banking sector towards what is the largest exchange by far at the moment, of the centralized ones. So it is good to be able to use it for what we want to use it for, before you see the light and start moving things away from centralized exchanges and onto your own cold storage or software wallet, whatever you use. All right. Any other questions?
I have a question, Luca.
Yeah.
Robin.
Go ahead, please.
Hi. I have two questions. The first question is a little bit tied up with the wallets and the exchanges and the talking about who can see your money or who can potentially control your money, and just being a little bit of due diligence and safety with that. If we're talking about Binance and Coinbase and Kraken, these are, and I'm very new, so correct me if I'm wrong, these are not decentralized exchanges or wallets. So if you're using them because of ease of use or things, should you be not only having your cold wallet or your hard wallet if you have a lot of investments, as your backup, but should you be moving your money, and are there decentralized wallets and exchanges where you are more protected?
Yeah, okay. The Binance, Kraken, Coinbase, these are private companies. Okay,
Yeah.
so you don't have a wallet with them. You have an account, the same way that you have a bank account with your local bank where you deposit your money. So it's they have control of your coins. Okay, so it's not you that have control, but they have control. So if something happens, and again, it's a private company. So let's say if one of those went bust, although it is quite unlikely, but it could happen, then you're just one of the creditors. Like there are many. Just join the queue, basically. Where if you have your crypto in your own wallet, then that crypto stays in your wallet until you dispose of it otherwise. So it is under your control.
So when you say your own wallet, as an example of an online wallet, that would be the Exodus or the MetaMask or the Yoroi type thing, where they're not affiliated with any company, but other than them. Other than themselves.
It depends, and then you're going jumping onto too many steps at once. But basically, let's say if you had your treasure or or of your cold storage wallet, like sorry, I've got a blank now, like Ledger, like the one I'm holding here in my hands.
Yes.
Then you have the coins will always be on the blockchain, but then that's the way where you store all your private keys. Okay, so you store the codes that you need to access them. Okay, and the only difference is this. In this case, obviously it's stored in this place. Okay, so I can detach it from the computer when I'm not using it, so nobody can actually use them. Where other solutions like Exodus are software solutions. So they're online, so somebody could potentially get access to them if your computer is compromised. Okay.
So they've got Binance, Kraken, they're exchanges which have a wallet version on them, but you would say
sorry, the wallet is a completely different thing. So the Coinbase wallet and the Coinbase account are two separate things.
So that's what I'm trying to say. One's exchanges and one's wallets. And if you were hodling your investments or your cryptos, you wouldn't, from a safety perspective, you wouldn't leave that in your exchange, so to speak.
No, you
you're
wouldn't.
saying then
you wouldn't.
that company has control, like you say. You would be moving that off either into a software wallet if it was a smaller amount that you're willing to leave on the software wallet, or even better, actually putting it on your hardware wallet. And only when you want to access that, i.e. change from holding it for whatever reason you have, if you want to use it for something, in another investment or something, then you attach your hardware wallet or you go into your software wallet and access your currency.
Yeah, so basically to make it simple, I mean, the reason why people use central exchanges is for convenience. Okay, so convenience because let's say, for example, you have a few coins and you want to stake them to get return on your stake. Now, one thing is to stake it on chain, and each coin has its different procedure, and then the exchange will make it easy for you because you can do it all in one place with a couple of clicks. Now, ideally, it is better to do things on chain because there is more security. But there are many instances where exchanges play their part because the transactions are very low and they make it easier to manage things from one place often. So often for me, it's kind of, you need to judge it case by case, and also look at what you are what you want to do with the coins that you have and what kind of coins you have as well. Because if you say you have for example, a handful of Ethereum tokens, and you want to store them just in your non-custodial wallet, like your Ledger or your Treasure, and just trade them from there, then it will cost you a lot of funds to do transactions directly on chain on the Ethereum blockchain, for example. Okay, there are other other ways of doing it with, on cheaper blockchains. But if you wanted to operate on Ethereum, that wouldn't be a very good idea if you have limited funds, okay? Because it will kind of like the transaction fees will actually, eat into your small position. So, if you had maybe $200 in a particular project, and then you have to spend, $30-40 for a transaction, then it wouldn't really make sense. But if you had $10,000 and then you wanted the security of the Ethereum blockchain, then actually, okay, fine, I can put up with the $30 or $40 because I know that my funds are safe. Okay, but there is also, there's never just a simple answer that is the right answer for everybody and for every circumstances. You need to judge it case by case.
Okay.
Okay.
Thank you.
You're
I have
welcome.
another question. My second question is, nowadays, if we go back to the sandbox thing and the Gucci bit of news that you talked about, and other people, Genius U, and it's been mentioned even with like Nike having their NFT shoes, etc., and how this metaverse is all coming. There's a lot of, would you say that it could be considered an investment to buy land on Sandbox or in the metaverse, or however it is that you do, if you have a company that would be looking to have like a virtual tour in the future? So this would be something that I would look to do on my own website, on my own platform, in the traditional sense, because that's what I'm familiar with. But with this whole metaverse coming, is that not a place to buy this theoretical online land somewhere, if your company has the facility or the need to have a virtual tour of a
Okay,
of an actual
I understand your question. And here is what we were talking about before, about where people are spending their free time. Okay, so if you're talking about what we're talking, for example, you're talking about commercial property. Okay, so you have basically, you want to have a shop window, whether it's digital or whether it's real. Okay, so how do you say, as an investment, a commercial property, it's whatever it is, kind of location, isn't it? Because the price of it is determined by how many people walk past that window every day.
Mm-hmm.
Okay, this is what the price is determined by. So if now people are not going to the local shop or the local shopping mall or whatever to buy whatever they want, but they buy online, and if these metaverses then start attracting that kind of traffic, then obviously land in a particular place where there is a lot of foot traffic, so to speak, even if it's digital, will have a lot of value. And if you want to be seen, things are moving from kind of like having a simple kind of like a website to be seen and to do your marketing, through your company, to now you want to, again, what's the difference between having a shop or having a website? And now, is it better to have a website, or is it better to have a kind of a digital present in one of these metaverses? It really depending on how your customer base approaches your product. If you want to be seen by people that do not necessarily know you already, so you want to be somewhere where people are hanging out. And this is the advantage of the metaverse. That's why land in many of these metaverses, they started very cheap when it started. Now is worth, in certain cases, hundreds of thousands, millions of dollars, simply because there are these communities now. They have attracted lots and lots of users. A new metaverse, with few users, then obviously will have much lower price for its land. But then if in the future attracts a large number of users, then obviously that land will go up in price because it's more visible. As simple as that. I mean, it's difficult to say, physically, that there is only one Regent Street in London. So you have a location in there, that you're going to have a space on that street. Digitally is a little bit more difficult, because who knows what the leading metaverse would be in 5 years' time. So you might buy, a piece of land in Sandbox, but say tomorrow nobody uses Sandbox anymore; they use Decentraland. So what is your piece of land going to be worth. It's a little bit more difficult to ascertain the future value of some of these investments. Okay.
But that would be similarly, obviously everybody knows Regent Street is in London, and that's a good place. But if I'm localized somewhere in Surrey, for example, the foot traffic of an actual village or town within that would be comparable to the metaverse and Decentraland of what's coming in the future, right?
Well, again, it depends on, you don't buy a physical piece of land, you buy a presence within. It's like basically you buy an advertising, let's call it like that. Okay, it's a little bit more interesting, but you buy an advertising on somebody's website. Now that is only as valuable as people do visit that website, and so they can see your advertising. So let's put it like that way. If people don't visit that website, your advertising is worthless, because yes, you got a nice banner on somebody's website, but nobody's seeing that banner. You see what I'm saying? So this is what I'm trying to see. These metaverses, they're only as valuable are the number of users they are using. So if you don't, people are not going on that particular thing because things are changing. Digitally, things can change very quickly, especially not necessarily I'm talking about metaverse, we're talking about gaming. You see, if you have teenage children, that 1 year they play one game, and then after 6 months they get bored and they move on to a different game. Okay, so communities move very, very quickly as well. Obviously, concepts like Decentraland and Sandbox have got that first mover advantage in a way. So they have already established large communities. But there are also other players around that, so you're talking about, are some of the big metaverses that are at the moment outside of crypto, are they going to also become crypto projects? What about Fortnite, for example, which is a huge metaverse that is not in crypto? So if that then starts, establishing a big presence in crypto, will it establish its own project? And then will it attract many brands to its projects? Will it take value from Sandbox and Decentraland? It's very difficult to say. It's so new, this sector, that it's very difficult to say how it will develop. The only thing we can say is that the metaverse will be huge. Now, who the strong projects are within that metaverse remains to be seen. But it's the same way why we might say it's difficult to choose the winning game. If you want to choose a blockchain game, it's difficult to choose exactly the game that will do well, but you can choose the platforms that enable games, to be developed. Okay, so you can invest in the platform rather than investing in a single game. So that's the thing with the metaverse. Now it's I'll say new. So there is possibility to get your investment do very well, but there's also possibility of losing because the communities are moving. All right. So
I'm seeing this as almost, and I might have the wrong vocabulary for it, but it is a personal decision as investment wise, etc., to try and do due diligence or to investigate what these platforms or metaverses are doing. But as you likened it to something like advertising, wouldn't it be quite similar in a way to saying that there's like Facebook, Instagram, and Twitter? Now, we know Instagram is now with Facebook, but from the outside, a lot of people will see that as 3 separate platforms, 3 separate advertising routes. And you might find a company on Facebook because that community that goes to Facebook don't go to Instagram and don't go to Twitter. So this would be a similar type thing if you're looking into a virtual shop, so to speak, within the virtual land.
Maybe you got the kind of like right sort of idea. The only thing is just multiply it by 100. So what about if there were 100 Facebook, 100 Instagrams, 100 Twitter? Which one would you choose? That's the thing that you are facing at the moment, basically, because it's not just your Sandbox and Decentraland. We all know it, but there are so many metaverses now being developed and coming on board. You go into any community, you go into any of the layer 1 projects, and I'll assure you there's going to be at the very least one metaverse on it. More likely 10, 15 metaverses per project. Okay, so yeah, at the moment,
your choice is so vast. Yeah. That's what you're saying. The choice is so vast.
Exactly. And these are Ethereum projects. Obviously, they got a certain community there. And other communities have different projects. So you have, obviously talking about Cardano. Cardano has its own metaverse, and so on. And so, going to Avalanche, going to, wherever, Harmony One, they all have their own versions of metaverses. They are either already on the market or they're developing. Okay, so that's the more difficult question. I'm thinking, okay, and as a business owner, we're talking about business here. The first choice should also be, where are my customers? So, once you've identified your avatar, then go and find out where they like to hang out, because this is where you want to be, is where your customers are. And this is kind of like not crypto related, but kind of like a business. The first concept of business is you don't sell generally. You sell to a particular person, particular avatar, and you're trying to do as many things you can once you identify it to attract that particular user. You see, so that's sort of thinking, rather than saying yes, buy land in Sandbox or buy land in the central. I'm just thinking, okay, what's your product? What's your experience that you want to show, whatever, and who would be your ideal customer? Where are they? Go and find out. Go and mix in the communities or that particular avatar and see what they are getting involved in, and that probably then that would be the best way to be, to get yourself involved in what they are doing.
Very good reminder. Thank you, Luca.
You're welcome. Okay, we have any other questions? Sorry, just reply to a private message. Okay, I'm thinking. Thanks, so interesting. So, anybody else want to raise their hand for a question, or just unmute yourself and ask him? No, you're not giving me a hard time today. Come on, what's wrong with you guys? It's too easy.
Are you able to send the video out? Because I missed the basically the whole thing.
Sorry, who's that? Who's speaking?
Oh, it's Maxine. Was this video? Are you able to send it out so we can watch it? If we only just tuned in at the end.
This video here, I mean this version. Yes, it's on the. Yeah. It's on the both on the Genius U Circle, the Crypto Investor Club, and cool. And it's also on the Modern Investor Facebook page as well.
Okay, sweet, cool. Thank you.
Okay, no problem. All right.
Sunday swap.
Sunday swap. We're going back to Cardano. What's up with Sunday swap, Robin?
I just wanted to. I think the last one is coming up at the end of February, sometime. Yeah. And as a new person who hasn't ever done any staking or anything, will you do a session, or is there a hand holding thing to show you then what happens? Like, I think we've spoken about drip drops and how do you get your Sunday swap, and
we can do that. We'll have a session later, Robin, for for my community. So we'll do that. Don't worry. But there is at the moment a reverse ISO that they're doing a Sunday swap for, for everything. So to encourage people to use single stake pool operators. So I've got a question for Jonathan actually. Jonathan, did you actually apply for the Sunday swap scooper? So did you get a vote?
No, I didn't manage to get into the original or the reverse. So
you should, because what they said is that basically they are going to, you can then unstake for now from the original stake pools, and you can stake to any single stake pool operator. They had at least one vote when they did the original choice. So you missed that. You missed that,
Yeah,
Jonathan.
I did. Perception is very hard. So when you're small and starting out, which to put your time and effort into is very difficult. So yeah,
it's an interesting conversation to have about because we're seeing in Cardano at the moment is this discussion about decentralization and how that plays out in real things. So how do you manage real decentralization and stopping big operators then operating huge number of stake pools? It's something that is difficult to manage at a protocol level, isn't it?
It is very difficult. And the Sunday swap, well, the drip drop Sunday swap teams have raised some challenges within Cardano that, never thought would be an issue for Cardano, but it just shows you that no matter how clever you are, developing blockchain tech is hard work. And
it is.
So far the answers have all been positive, but yeah, it's constantly evolving ecosystem.
Oh, by the way, for those of you that didn't realize, I don't know, one of the things that happened one day last week is that Cardano had more value transaction on its blockchain that Bitcoin and Ethereum put together. So just to make you realize how, that's why we're talking about Cardano so often. Jonathan, I have another question for you. I don't know if you have followed the stablecoin project that CatCoat is working on, DJED. Do you have any last minute news or something that you can report?
No, unfortunately, it's all been quite quiet on JED front. I think they're still in the works. The Coty team do seem to be extremely busy and they have their big polished front end, but then the actual work gets done by the teams that we don't get access to, it seems. So a bit of a shame. They did turn up at a town hall last year where they were launching their native assets program within Catalyst, but since then it's been quite quiet. But it was interesting to see your DeFi Llama stats on total value locked in DeFi. Because on Cardano, it's all basically gone to Sunday swap so far, even though Muesli swap launched back in November, was it?
Yeah.
They've got a far lower percentage of value locked than Sunday swap. So Sunday swap has proven to be the one. There's a couple others coming up there, so we'll see how they do.
But it's interesting. It's interesting to see how quickly the total value locked, which is the way that you really value the DeFi projects. So how many people deposit funds in certain projects, and like I said, DeFi in Cardano just started really. But I follow one of the blockchains that I follow as well is Harmony One, and beginning of last year they pretty much had no total value lock whatsoever. I think it was less than 1 million, and now they kind of grown quite considerably from that point of view. So it's incredible what can happen in a short space of time. and even in Cardano, just over 100 million in just a few weeks is quite impressive. So it'll be interesting to see what happens in the next 2 or 3 months. Yeah, I personally, I got my idea that Cardano will dominate DeFi in the future. Talking about maybe it will take a couple of years for that, but definitely is going to be a very, very strong player.
Yeah, I can't dispute that. I mean, even though it just launched in January, there's already 5 DeFi protocols listed on DeFi Llama, compared to Harmony's just the one. So yeah, the adoption is, or the amount of teams building on Cardano is the impressive thing that I think gives it that longevity that you talk about. There's people that have sussed out which is a chain to build on from the beginning. They're slower, they're more methodical, but hopefully it wins out in the end.
So we're working out. It's so good to have you on this call, Jonathan, as well, because we can ask you questions that you can't normally raise on a normal call, because you've got the inside knowledge, and also you're also a developer as well. So it's good to know. The last question I wanted to ask you is, we often talk about developers' activity, So can you just tell us briefly, how would you see the developers' activity? How will you compare it between blockchains? What kind of metrics you look for?
Well, my metrics purely are conversational based, pretty much. So the bulk of my conversations are all around Cardano, obviously, because that's the community I'm in. But it's very interesting to see the number of new people in the space who are already working hard on other chains. So this last couple of weeks, I've heard, and we've had Polkadot developers come and collaborate on town hall sessions. Harmony One has come in as well. There's even a veteran Cardano developer who's working on who's possibly being funded by a Harmony One project now, and that seems to be the difference between the Ethereum Bitcoin maxis, who are all about, theirs is the king, whereas actually these third generation chains, they're much more collaborative, and the development teams are much more open-minded about using the best technology rather than having their one win. So yeah, I can't give a clear picture on the other chains, but it definitely seems that Cardano has, and everybody purports to have Cardano having the largest developer community and certainly the most active one. But yeah, I wouldn't discount any of the third generation blockchains as of yet. And
my question was just letting sure, we all know, looking maybe at GitHub commits as one of the metrics. Like, just wonder if there were other metrics that you would look at for like developer kind of metrics.
Yeah, no, GitHub commits is a very, very strong one, and just the number of projects that are released. So all the mainstream big blockchain news outlets, they do talk about the projects that are releasing. They've all got their biases, and most of them are biased against Cardano, and yet you still see a large proportion of projects being talked about. So one of them is DC Spark, with their Comeda Ethereum sidechain between Cardano, that's launching soon as well. So we'll see suddenly a whole load of Ethereum developers being able to launch their projects on Cardano without having to do much more work. So then you've got the cheap fees of Cardano running Ethereum apps, which is, it's a very exciting. We'll see how that takes off. But yeah, those sorts of collaborations I really like to look at and keep an ear to the ground on. Anything.
Definitely, that's definitely the new frontier, isn't it? And how you can, because at the end of the day, yes, if you're an infrastructure provider, then you develop your infrastructure. But if you're an app, you just want to contact as many customers as you can. So the more places you can be seen, the better it is. So if you can port your project on different blockchains and be kind of cross chains, then it's a win-win from the point of view of the apps.
Yeah, and that's what goes back to Robin's questions about which metaverse do you pick. It's hopefully there will be cross collaboration, and certainly 3D models that you have built are 3D models. They're independent of any metaverse. You can import and export 3D data into multiple different platforms. So I'm hoping there will be a sort of marketplace for moving your meta assets from one chain to the other just as easily as there, hopefully will be for the actual tokens and native assets themselves.
Definitely. I think as soon as it's possible, I will do one of these sessions into my apartment in Harmony One.
Oh, okay. Interesting to see that. I thought you were a cornucopia guy.
No, I am. But look at different things. Yeah, also, I'm really keen on cornucopia, but yeah, I'm playing different playgrounds, put it that way.
Yeah, definitely good advice. Hedge for the moment.
All right, okay, guys. So thank you very much for being on the call again. I think it's been really, really enjoyable to think about different things that we covered, quite a few of different subjects. If please don't be scared. If anything of the things we talk about, they're going above your head or you don't understand, just just please don't be worried about asking questions, okay? Because by asking questions, that if we talk in things that are not clear to you, there will be somebody else that they're not clear for. So it's not just asking them for yourself, but also helping other people. And if we don't see that, then we're not doing our job properly. But, so you help me as well if you tell me that you don't understand something. So I'll rephrase what I'm trying to tell you. Okay, so again, thank you very much, everyone. Really enjoyed this. I hope you all have a great weekend, and I just hope that if you're in the UK and this storm is hitting, I hope that you're not being hit too hard. At the moment, where I am is pretty mild, although it's windy and rainy, but nothing too bad at the moment. But I know that in Wales, you're being hit quite hard, Karen. So hopefully you'll be all right. But nothing yet at the moment. But big things are expected for later on. So hopefully it's nothing more than normal storm. All right. Anyway, have a great weekend, and I will see you all again next week. All right.
Thanks.
Bye, everyone.
Bye.
Bye.
Bye, everyone.